Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to take a look on the earnings report for the first quarter of this fiscal year 2024 for one of the giants in the semiconductor space, Intel. It is a foundational company. It is the company which started this semiconductor revolution back in 1950s, 60s. But of late, it seems to have fallen behind its competitors and it is struggling to stay competitive and stay profitable. For last couple of quarters, it has been suffering losses. The only change this time around has been it has been able to pay its losses. The amount of loss it has suffered in the first quarter of this year has reduced, and that is the only solace. But it is likely to take some time, take a couple of quarters more for the turnaround to be complete. And in course of time, it is quite confident that it will be back in the profitable territory once its internal foundry model is in place and working. Right now, its costs are overrunning the sales, the revenues, and as a result of that, there is a red in the bottom line. So we now see what are the factors which are affecting adversely the company's working, company's finances, company's profitability. The revenues were up 9 percentage point year over year, but still its net income is in loss. So there has been growth in its revenue, there has been increasing demand for its product. Only its capacity to deliver the products in a profitable manner is still to be achieved. Here, there are the key highlights of the financial results. The revenue up 9 percentage points, gross margin stands at 41%, which is up 6.8 percentage point. Operating margin is in red, it's in negative. Net loss is of US dollar 0.4. For the second quarter, the company is expecting the revenues to be in the territory of US dollar 12.5 to 13.5 billion, which is not going to be much different from the revenues of the first quarter. So it is expecting stable revenue outlook. There is not much of a change expected on the revenue side. The gross margin is likely to be around the same figure, slightly decline, and it is still expecting the second quarter to be in the loss. There is no expectation of second quarter being in profit. So that is the factor which I am talking about, that it is likely to take some more time, some couple of quarters at the minimum, for it to get its house in order. Now coming to the consolidated condensed statement of income, we have these operational details. The operating income was in red this time around as well. So it has not been able to break even on operational terms. It is still struggling to reach the scale, and also there has been some challenges on its ability to deliver 7 nanometer semiconductors. Net income, you can see that it has reduced significantly from more than US dollar 2.7 billion to little above US dollar 400 million. So that is a positive for the company, but whether it will be enough to satisfy the investors, that is the question which needs to be answered, which is still unanswered. Balance sheet, we will not really go into the details too much. The only thing is we are concerned with this cash and cash equivalents, which give us the idea of the company to meet any unforeseen demands on its cash pile for anything ranging from the external requirements to the internal requirements related to the R&D or any other need of the company to stay competitive and maintain the ability to succeed in the marketplace. This is the cash flow statement. From the operations, there was cash outflow of $1.2 billion, which is little less. It is around 60 percentage point of the prior quarter's outflow back in April 1, 2023. The quarter ended last year. For the investment activity, it spent $2.5 billion. There is also significant reduction on account of the investment activity cash outflow. The main difference is in the purchase of short-term investment. Last time around, the cash outflow on account of that was $16.1 billion. Now it is down to $6.4 billion. There has been proceeds from the maturities and sale of short-term investments, which are more than the purchase of new short-term investments. So there is this $3 billion of net cash inflow from these two transactions. It is spending heavily to acquire the property, plant, and equipment for successfully implementing its internal foundry model, and that is why we are seeing this high cash outflow of almost 6 billion. The cash provided by the financing activity, it has been able to raise money from the market. It has issued long-term debt, and as a result of that, it was able to bring in $2.5 billion. Overall, with the financing activity, there was cash inflow of $3.6 billion. It was able to balance the cash outflow on account of operations and the investment activity. So its decline in the cash and cash equivalents was just by $156 million, and it was able to maintain its pile close to the $7 billion. So with this, its finances are in order. It is going to be able to survive this winter, semiconductor winter for it, because if we look at the likes of AMD, Qualcomm, Nvidia, of course, Nvidia is now in different league altogether, but still all other competitors combined seem to have left the Intel behind in the industry's changing need to supply chips for the AI computing, and the Intel is playing catch up. But I still believe that with the company's illustrious past, it is going to be able to survive and then in course of time challenge the current dominating players as well. Now we turn our gaze to the technical side of the story. In the short term, the Intel stock is not really moving anywhere. It has been consolidating close to these 30 price level for last couple of weeks. After declining sharply from the price levels of around 40, 45, it has found some support on the lower levels of 30. So you can see that it has lost almost one third of its valuation in the span of just 2 months. In April, it was sitting close to 40. Now it is sitting close to 30. So that is a reduction of almost one third market cap in the short span of 2 months. In the same time, most of the other semiconductor companies have gained ground, have seen their market valuations rise. In the short term, I think as long as it is holding these 30 price level, we can simply take advantage of its range bound nature. So we can adopt a scalping kind of strategy here. There is not much of a range, it is simply moving in this 2 to 3 percentage point range, and I think we should be prudent in this scenario. Anywhere close to these immediate swing lows, provided it finds support next time around, also can be used as an opportunity to buy with the possibility of further rise towards these immediate swing highs. So you will have to adopt a scalping approach in this kind of scenario in the short term. If your horizon is a bit longer, is a bit more prudent variety of the medium term, then in medium term, it is too early to say whether its consolidation is likely to give us some room on the retracement or not. We can expect some dead cat bounce on these lower levels, but it is still too early to be confident about that as well, simply because it hasn't really seen any sustained buying momentum on these lower levels. After it fell sharply, it has been just able to consolidate losses and it is holding close to 30, but there is no fresh buying momentum on these lower levels. So we will have to be cautious, we will have to be prudent in our approach for any contra trend trade. Maybe if it sustains this level for a couple of weeks more, then in that eventuality we can even count on it to show some retracement towards maybe 35 or 30, 35, 40. That price range can be expected, but right now I don't really feel there is an opportunity to buy, and of course there is not much of an opportunity to go short sell as well, simply from the point of view of medium term. We will have to be bit cautious and simply sit on the sidelines, as there has been sharp decline already, and we are not really likely to see it moving much in coming weeks on the lower side as well. In the long run, it is again back to where it started back in the second half of 2023. It found the buying momentum after spending a couple of quarters around this 25 price range, and then it doubled in valuation over next few quarters. Now it has again found itself in a bearish territory, and this time around, whether it finds support or not, I think we can't really count on it too much. It is not in a fresh sell category, neither it is in a buying category. I think it is better left alone at this current juncture. Maybe if it doesn't really go anywhere over next few months, maybe in the long run, we can make a fresh assessment once we have the second quarter's earnings for this year as well, and we will of course see what we can do at that point in time. But in the long run, this is the company which should be ignored for the time being for next few months for any investment and trading decision, and better for us to wait for more clarity to emerge, and then we can take advantage of the situation. So that's it from my side for today's session of daily stock. In Intel's case, we saw that in the short run there is opportunity for scalping, but in the medium term to long term there is not much on the table. We can't really trade too confidently in this company, looking at its current scenario, and maybe this is the stock which has to be ignored for a while and wait for better opportunity in coming ones. Or if you want to invest, I would suggest better invest it somewhere else. Now it's time for me to sign off for the day. I'll be back tomorrow with a equally interesting company to work with. Thank you all for joining in. See you next time around. Till then, goodbye.